Okay. What's up, guys? Want to make a quick video of how to kind of go about reverse engineering certain setups and certain plays when it comes to either long or shorting microcap stocks. This topic's really interesting. It's for me, it's evolved a lot over time, over the past 2 years, and now it's getting to the point where it's pretty systematized and very effective. So of course, like whenever you either learn a new setup from somebody else or you're trying to develop your own setup, you always need to go backtest the thing you're trying to learn more about. For example, if you're learning a setup from somebody else, which is how a lot of day traders start trading, you should never just fully trust them, ever, no matter how successful, no matter how many followers they have, no matter how many people love them. Anytime anyone teaches you any type of, here are my criteria, here are my setups, you're going to want to go find 300, 400 charts of that setup and take screenshots and save them all in one location and go through them one by one and see if that person's setup makes any sense at all. Like how effective is it? And then, of course, look at all the different data in terms of market cap and floats and price action and then fundamental analysis and all types of stuff. So here's how I've been doing it. So first, you kind of need to know what a lot of people have questions about is, well, how do I know what plays ran in the past, right? And when I first started doing this, I used to literally go on like Profitly and try to look up day traders who I know day traded the stocks I liked, and I would just look up all the tickers they traded in the past, which is very inefficient. It takes forever. You miss a ton of plays because those only record the plays that they traded and the ones they chose to upload to that website. And, it could be really hard going back and finding those old plays. So what I'm going to do, I'll tell you how I did it. There's a website called Spikeheat. And this is simply a website that allows you to put in criteria of plays that happened in the past, and it'll pull up all those plays. So, for example, here's my 40% gappers chart file. This pulls up any stock that went up 40%. So that was up 40% at market open from its previous close. And I searched for the last 20 years. I deleted that. Oh, yeah, over here. Last 20 years, every stock that went up at least 40%. Does not include OTC stocks. Luckily, nowadays we don't need to care about OTC stocks because they never run. But anyway, you don't even need to do this because I'm going to make a pinned tweet that simply gives all of the pre-market runners and all of the intraday runners, because sometimes there's stocks that had no pre-market action but then went up 50% or 100% or 200% in the intraday after market open. So I'm just gonna put that on my Twitter pinned tweet, and you can download it. It'll be a Google Drive link. It'll have no other data except the ticker and the date. I'm not going to give you all my hundreds of thousands of data points and all that stuff because that's something you really need to do on your own. But I will give you the tickers. And then after you do that, after you have all those tickers, like whenever you learn, like I said, when you learn a setup from somebody else or you're trying to discover your own setups, I find the most effective way is to take screenshots of every single one of those charts. And nowadays my charts look a lot different than they used to. I used to just take straight up pictures 1 minute. So I use 1 minute. I used to never use the 5 minute. I used to never use moving averages. I used to not even use VWAP in the very beginning. So I would just have blank 1 minute charts of every single play. And I actually learned a lot from that. I was kind of a noob, just kind of trying to learn what to do in this game. And then as I evolved over time, my charts started looking a lot different, started incorporating a lot more indicators and lines that I found to be useful through my own backtesting. And of course, that also meant I had to go back and retake screenshots of all my charts. But you'll see here, these are my 40% gappers documents, 1 minute and 5 minute charts, all EMAs, so exponential moving averages and VWAP. This is from 10:15. I don't have the ones from Friday, 10:16, but it's from 10:15, and it's the 1 minute, 5 minute of every play, 1 minute, 5 minute, 1 minute, 5 minute, and I have this for just thousands of charts. There's thousands of charts. And by the way, this isn't even completely done. I probably have another 1,000 or so more charts to put in this, but it's big enough for me to go back test certain strategies. So this is kind of like my master file, right? This is when I'm ever trying to come up, whenever I notice a new pattern, or I think that's really interesting, or I'm trading something during the day, and at the end of the day, I'm like, I've seen this happen before. Let me go see other situations where this exact thing happened. I could just go to my master chart file, has thousands of charts, right? And I could just keep scrolling and scrolling and scrolling until I can find instances of that situation. And then what I can do then is I can copy and paste those charts. Say I think the Sun W play is really interesting. I can copy and paste these two charts and then put it into subfiles of like plays that I'm looking at. So all these files right here are like potential setups that I'm studying and watching and trying to learn, and I'm always getting new ideas every day. Sometimes you find things that are super useful, sometimes you don't. But eventually, especially if you have a lot of data, here's all my charts for the pre-market runners, here's all my charts for the intraday runners, just thousands, you see 200 megabytes. My gappers is 500 megabytes. It's a ton of charts. You can start building out really, really robust setup files for very specific situations. And then, since your sample size is so huge, because I have every single 40% gapper for the past 20 years, and I have every single intraday runner for the past 20 years, you could get very, 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 very specific with your criteria, and you can really zone in on what are the highest quality plays within that setup, right? So here's an example. So this is the manipulated high-day clearout. So let me try making this bigger so you can see. So the manipulated high-day clearout is, I did some videos, especially my last one on ADAP, about how stocks are manipulated. And what you have to understand about stocks that are manipulated is that usually there's a single player manipulating the stock. So what that means is there's a single person or a very small group of people working together who are providing support for the stock. They're letting it fall to key levels and they're pushing it. They're letting it fall to key levels and they're pushing it. And what you need to know about that is every time it falls to a key level, so in this case, the 1 minute 200 EMA, which is this white line, super important for early morning manipulations. Super, super important. Because a lot of times what you'll see is they'll fall to this level. They'll provide a ton of support. So this pushes the VWAP. So in this case, stock's pretty far down. Usually when a stock's this far down, it'll give a weak push and then crack and fade. Happens all the time. However, if it's manipulated, it'll give a weak push. It'll fade to a key level. And again, like I said, the 1 minute 200 is this exponential moving average. So 1 minute chart, 200 exponential moving average. You can see right up here in Thinkorswim. Thinkorswim labels it as move average exponential, and you see 200 right there. They provide support again, and then whenever you see this kind of W pattern, this is down, up, down, coming back up, breaks VWAP with huge volume. This is a signal. If you shorted this is the signal to get out, because a lot of times it'll come up, test, come up, and then it'll crack to 200 and fade all day. But if it breaks VWAP, especially when on huge volume, because obviously there's a lot of short sellers who had VWAP as their VWAP and this intraday high day as their stop loss, so that's everybody's stop loss getting knocked out. You also have to get out. This is super, super bullish. So this pattern, like I said, is the manipulated high day clear out. So this is actually for a very specific time frame. And actually, I'll show you my criteria. I kind of wanted to hide this, but when you start putting these charts together, and you go through, just like hundreds of examples, you start to notice like there's very specific time frames where this pattern works well. There's very specific price action where it works well. There's very specific like floats and microcap market caps where it works well, price action and volume that works well, and you start to see what the ideal kind of situation is. So this is for a clear out usually between 10 a.m. to 12. So this does not include clearouts on the initial morning push. That is a different sub pattern that needs to be studied differently. So high day clear out between 10 and 12, right? So usually what that means is the stock goes up, shows weakness, right? At market open, there's some type of weakness. And then pushes up, and by the way, it could be a little bit before 10, it could be at like 9:45, it could be like usually not after 12. Usually it's in like kind of this time frame. And that's for a very specific reason, because when somebody's manipulating the stock, they can have different ways of manipulating it and different ways of selling. Sometimes they manipulate it in the pre-market. It opens very strong. So imagine this didn't fall. Imagine this like kept going up here. It pushes and then falls all day. We've seen that happen. Or like pre-market, super strong, gives a big push, gets stuffed and then faded. And those are super easy shorts. I mean, that's a pattern that happens all the time. But sometimes this happens where it shows weakness, gives one big push, clears out high a day, and fades. So again, this is called a manipulated high day clear out. So it's like, why does this happen? Like I said, somebody's manipulating, they're absorbing shares, so they're accumulating shares, which means they want to sell those shares eventually, right? At a high price, because that's how the manipulation works. So if they're accumulating shares down here, where are they going to sell the most? Where is going to be the biggest volume for them to dump all these shares because they have to accumulate here, 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 and also they have to a lot of times use market orders to push the stock up. So they're pushing this because they have to push the stock through the resistance. So like if short sellers are shorting VWAP here, like say right here, the manipulator has to use market orders to push through all those shorts who keep shorting it, and all the longs thinking, oh, the stock's probably going to die, I'm going to sell. So it's like, how do you push through all that resistance? You have to market order, which means you have to accumulate more shares. So they're accumulating a ton of shares, and it's like, well, we have to get rid of these. How do we get rid of these? Where's the volume going to be the biggest? It's going to be biggest at high a day. When it breaks high a day, retail investors love it. There's a bunch of shorts risking high a day, so we're going to get covers from shorts. But also, you're going to get a lot of retail buyers who don't realize how these manipulations work, and they're going to chase this breakout. They're going to see this high a day. They're going to see huge volume, high a day. The tape is going to look crazy. It's going to make retail longs really emotional, and they're going to start hitting the buy button, thinking this is going to go. Oh, resistance is gone, super high volume, this is going to go to $10. So they start buying. And that's exactly where the manipulator is going to sell. You have to realize that the reason this is getting pushed down is not short sellers. Short sellers make up such a tiny amount of the selling pressure that it can almost be ignored, almost. Like a lot of people think the stock market is a game of longs versus shorts, bears versus bulls. It's absolutely not. It is absolutely not. It's a game of retail investors versus manipulators. People with big pockets versus a lot of other people with smaller pockets. Like that's how the game is played. And I'll show you that. I have chart after chart after chart of this that exactly proves that. So this is classic manip action. It breaks VWAP on this big green candle, shows you, like I said, shows you that the manipulation's on after the support, pulls back, but you can't short this pullback because it really needs to be super, it either needs to break high day or come up right next to it. Like to me, especially after seeing this big VWAP green candle, I'm like, okay, like you have to wait for the setup to show itself, right? And even if this cracked and fell right here, then I'm like, well, I missed that. Like, that's fine. It's okay to miss plays because you don't really lose any money. I mean, you lose your borrowing fees, I guess, but like that's a cost of playing the game. And potentially losing borrowing fees is better than shorting this too early and getting squeezed 20%, okay? So so don't be afraid to miss out on a play because it's not ideal, right? Yeah, sometimes it's gonna fade early, and the setup doesn't really show itself, but it's okay. That's okay, because if you're patient enough, this happens. Breaks high day, gets stuck for 3 minutes on the highest volume of the day. Huge red candle. This huge red candle, again, is not shorts. It's also not longs getting out. This is the manipulator who accumulated these shares. He's dumping his stock. And usually when that happens, when you see a 10% dump within like 1 minute, within like a 1 minute candle, this is short. I actually start shorting right here. And I just risk high day because I'm like, okay, the odds of this actually coming back up are really low, like really, really low. Sometimes it happens. It's not 100%, no pattern's 100% win rate, but it's very high. It's very, very high. And whenever I short this, you always have to remember that the 1 minute 200 was used as support. So that's always going to be my first price target. I'm going to short up here and I'll be like, okay, it should crack pretty hard and hit the 1 minute 200 as support. So I'll take a good chunk. And then what I'm thinking is, as long as it doesn't reclaim VWAP, which is kind of like the last line of defense here, because if this is a midday VWAP reclaim, sometimes it does a little pop and then fades back down. But I like to get out. This is pretty much my stop loss. And as long as it doesn't break this, I know that this guy who accumulated all these shares, he's not able to get rid of all of his shares in these dumps, like this dump and this dump. He still has more that he wants to sell. And also there's all the intraday bag holders. There's all the longs here, right, that chase these breakouts, and now they're backed. And as the volume decreases, there's going to be more and more long selling as the day goes on. So you have the manipulator who has the dump stocks, and you have the longs who chase after the dump stocks. And then you're going to have some short sellers who kind of short these pops. So like that selling pressure is eventually, it's really common to give these kind of like midday, super low volume periods of consolidation. And then once you get like later in the day, like 1 o'clock, 2 o'clock, you get a crack. And then my ultimate price target, and we'll see from these charts, is the 5 minute 200. So the 200 EMA is super important. It is super important. It is. Once you start putting it on all your charts on a 1 minute and 5 minute, you start to realize just how many algos and manipulators use the 200 EMA as support, as resistance, and to make important decisions on when to get out, when to get in, which is why you see this 1 minute 200 support, like little bounces, straight bounces off it. And it's also why the 5 minute 200, you see these late day fades after massive price manipulation on big volume, often fade to the 200. Sometimes they get a little bit below, but it's a good price target. It would at this point, it would probably be my ultimate price target, even though sometimes it keeps falling. But I'm like, okay, like if it keeps falling, usually with this type of price action and volume, it might only fall like another 20 cents or something. So I'm happy to get out completely right here. So like I said, this is a chart file of this happening. So again, here, big push, LIZI, tons. If you look at the tape, tons of manipulation, tons of soaking in the pre-market. Always really useful to watch these stocks in the pre-market and to really learn how to use level 2 and tape rating in terms of recognizing manipulators and how much stock they're accumulating, how they're manipulating it, like what their ultimate goal is. So LIZI, this is actually an example of it didn't break high day, because in order to break high day, they actually need enough volume to break it. But this came very close. This was like 4.77 and high day was 4.88. So, and also you have the ideal price action where, so manipulated, again, 1 minute 200 manipulation, comes to it, tests VWAP, comes to it, breaks through VWAP. So this is, if I shorted this, which a lot of times it could be a good short because a lot of times this just fades, you take a small loss. You take a very small loss. And then the manipulation is on. So you can't, like this high is too far away from this high. So it's like, this is not a good place to short, especially once you see 20, 30 minutes of bid manipulation. So even if you did short this, which again, it doesn't really fit the pattern. So this is kind of like no man's land, especially with this amount of volume chopping around. This is kind of like no man's land of you don't know what's going to happen. The guy is clearly manipulating the stock, so this could easily squeeze. So you wait for your pattern to show up again, and then you get a massive, massive, massive green candle that triggers all these stop losses, comes right up to the high day, doesn't break it. So sometimes this pattern doesn't break, but what's important is the big green candle followed by the big red candle. And once that big red candle happens, then the minute is over and you get a crazy hardcore fade. And again, 1 minute 200 support, 5 minute 200 direct, like a direct bounce off it, like exact bounce. It's so clear that algos use this to make market covers and to buy little dips and stuff like that. So this one's a little more choppy, and this float was like 2 million. Doesn't fit the exact pattern. It does do the high day clear out, does get the big crack, does fade. So it fits it, but ideally you kind of want, and again, this is like, these are the little details you notice from taking screenshots of these charts, which is why up here I put like, this is like the ideal situations. Like ideally this is what should happen. Again, big parabolic breaks high day, cracks. Big parabolic comes very close to high day, doesn't quite break it, cracks. But this is kind of like, kind of like 2 million float, which is like, you could definitely short 2 million floats and make money, especially if the right setup shows up, but it's just a little more risky. Also, borrows tend to be really expensive or impossible to find on 2 million floats. But this actually follows another pattern called the repeated higher high crack, which is that basic pattern is this guy is shows weakness, breaks market open high, cracks, breaks this high, cracks, breaks that high, cracks, breaks that high, cracks. So like you get repeated high day cracks, like it breaks high day cracks, breaks high day, breaks high day cracks, breaks this final high day crack. And that's pretty much, that's how you know the stock is being super, super manipulated. The person is constantly trapping shorts and then using the stop losses from those shorts and also buying pressure from retail volume to sell the shares he accumulated down here, he's selling it. Shares he accumulated down here, he's selling it. Shares he accumulated down here, he's selling it. And then finally, he reaches a point where the minute is over, he dumps all of it, and you get a fade. This wasn't really a hardcore fade because, again, like the problem with like 2 million float stocks is that they can often come back, what I call come back from the dead. Very like there's actually a great afternoon long strategy that involves like 2 million float stocks that will actually like die, like will actually come down like 60-70% of its gain. So it'll come up here, go all the way down here, and then at like 1 o'clock, 2 o'clock, you'll start seeing these crazy green candles. Like it'll trade like 10,000 shares a minute, and then you'll start seeing these like 100,000, 200,000 green candles that like start reviving the stock later in the afternoon. Doesn't happen super often, but the point is on super low float stocks, they can come back at any time from anywhere. They can always come back because they're so easy to manipulate. Again, here we go. MTPP, 1 minute 200 support, gigantic. This faded so hard, and then you start getting 2 million candles at market open. Huge, gigantic candles. Like, I don't just mean price action, but I mean volume at market open shows you that somebody is, it's a good indicator that somebody's manipulating the stock because they're using market buy orders to absorb a bunch of shares and send the price up. And again, find support. Again, you have to wait for it to break this. Find support. This isn't close enough. Find support. 20 minutes of, this is the 1 minute 20. So along the 1 minute 20, EMA consolidates for like once you see, like, if this was truly weak, after like, it would fall down here, give a weak bounce and crack. But it would all happen within like 5 or 6 minutes. But once you see 20 minutes of just like early morning bid support and manipulation, just like LIZI here, stock is being heavily manipulated, and if you're short, you have to get out. You have to get out because the person is controlling the stock, and he's not going to let it fall. So you just get out. Or in this case, and same with LIZI, you don't even short it because it doesn't even fit the pattern. It has to kind of parabolic very, very close to the high day or break it. In this case, parabolic, breaks high day, and you start getting this action where it breaks high day and it starts like chopping around in a very tight range after the high day break. There's a guy called Trade the Matrix, and it's spelled like Trade the Matrix. He has a blog that I highly recommend checking out, and he has 2 articles about how microcap stocks are rigged. I think he calls it small caps, like how small caps are rigged or something. And he has 2 different articles, and he kind of explains this concept of what he calls a micro shelf, which is when you get some type of like key resistance break, and then you get very tight range, which kind of makes no sense. Like if you think about it, this is the biggest volume candle, and that means like if the stock's going to break out, it should just keep going up and up and up and up and up. But if you get like 2, 3, 4, 5 minutes of just super tight consolidation on super high volume during all those 1 minute candles, it tells you that the manipulator who absorbed all these shares, who sent these market buy orders, absorb shares, he's selling his shares into this volume. So retail volume is trying to push this up, but he keeps selling it. Like it keeps hitting a resistance and he sells. It pushes up, he sells. So it creates this super tight range. And then once he gets as many retail longs pretty much trapped as he can, he gives a huge crack. So this is him market ordering a ton of shares. Also interesting about MTP, I did a video on this, explaining that this had warrants, 3 million warrants at like $2.05, which kind of, from a fundamental analysis standpoint, tells you why the stock was manipulated. Not only are they making money on the manipulation, but they have a bunch of warrants that at this point are 100% in the money, right? The warrants are at 205. This is at 433. So they have a lot of warrants to exercise, which means they get stock from those warrants, and then they sell that stock, and then they have all the shares they accumulated to get the stock price up here, which is why you see this insane crack. And even though this still trades like millions and millions and millions of shares in volume, it just keeps going down. And that's just because how they do it is they sell it, they let it bounce, they sell more, they let it bounce, they sell more, which is why like VWAP should not be reclaimed here. As long as VWAP's like not being reclaimed, like these bounces are really normal. They're just letting it come up and they're selling. They're letting it come up and they're selling. And then eventually, you get later in the day, all the longs who got bagged over here are starting to realize the stock's not going to come back up. And these people who manipulate it are trying to dump the last of their shares, which is why a lot of times you get like this low volume consolidation and then eventually cracks like we saw before. And again, here's another one. Clearly, same thing as MTP. Clearly manipulated market orders on huge volume. Actually breaks it here, cracks. Usually a good short. This gets stuffed really hard, and you see a big red candle here. But this is why you have stop losses, right? You're just risking, if you short here, you're risking a side A. It breaks it, and then I'm like, okay, let me wait for the crack. And then and I did short this, I remember, here. Once I saw this high day break, this lower high, and then big crack, I shorted right. This is the type of pattern, by the way, well, I don't even wait for a bounce, because if they're unloading like that many shares, there often isn't a bounce. MTP was the same way. Cracks 10%, just straight falls. Like everyone wants that perfect lower high bounce. But one nice thing about taking screenshots of all these charts is you realize like, okay, like on this pattern, this isn't a wait 5 minutes for the bounce type pattern. This is a short after the crack type pattern. Like that's what this pattern is. And yeah, as you see, kind of weakness. This one went way past high day, but you still get the big crack and the big crack, but volume really choppy and fadey. And then sometimes you get situations where it's like, it's not the pre-market high, but it's an intraday high where, again, it still falls in that 10 to 12 time frame with that same weakness in those same parabolic market orders and those same unloads. And they could be great shorts. In this case, it bounced off the 1 minute 200, which again, like I said before, the 1 minute 200 is usually highly manipulated. So like if I'm shorting, that's going to be my price target. And if I see a bounce, then a bounce again, usually I just get out. Like, okay, it's not like it might crack later, but like if it cracks later, I'll short later, but I'm just going to get out. This is a classic manipulated push, by the way. This happens a lot in the afternoon on stocks that are slowly fading. It'll give one big push, micro shelf, crack, and then fade. But yeah, here again, goes up, shorts weakness, comes very close on a huge parabolic, big crack, falls all day. And same thing here, comes very close, big crack, falls all day. So very standard pattern happens for the, again, big crack, falls all day, comes a high day. It's the same reasons. It's the person manipulating stock is using this potential breakout, which every long is chasing, and every short seller is getting their stop loss triggered to sell the shares that he accumulated during pre-market and during intraday. And then once the crack is on, everyone's bagged, he's selling his shares, and it's fade city. So anyways, getting back to the point of this video. I was able to do this because of recognizing that pattern, like, you know, of course, over the years, learning about how manipulation works, learning about what they use, what key MAs they use to do the manipulation, how to read the level 2 on the manipulation, and then fitting those manipulations into certain patterns. And because I have all these chart files, every time I see that and I notice a new pattern, I can go through all these charts, which I already have saved, and then I could just put together a quick chart file, and then I have 50 examples, and then 100 examples, and then 200 examples, and then I can create criteria for what the ideal setup or pattern looks like for that situation. And then when it shows up again next time, you know, I know where to size in. I know what price action I want to see, what the manipulation usually looks like, what the ideal setup and what the ideal entries and exits are, and then I can make money that way. So anyway, so this is kind of a just small example I wanted to show you of how I go about doing this. And as you see, I have a bunch of files. I actually have 0 kilobytes. These are just new things that I kind of want to, like, hey, like these are new things I'm looking for. Like, let me go back and fill these out and see what I can find. And then you keep doing this over and over and over and over again, and eventually you're gonna have like you know, maybe 10 or 12 setups that might be super 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 specific, but since you know so many, you could trade those. Like, here's a classic. This is a classic setup that, like, this is a setup I recognized even like in my early days, which is, this is the 100% parabolic crack. It's super simple. The stock goes up 100% parabolic. It cracks super hard and falls. like it's the, like, this happens all the time, and it's the same fucking price action. You know what I mean? Like, this is like one of the easiest fucking plays. I don't like it too much when it happens later in the day, but it can work. You know, it's the same crap. There's like hundreds and hundreds and hundreds of these examples. Oh, that's cool. This is a combination of the pattern I just showed you and the one. Is it not only did it spike close to one, so sometimes it doesn't exactly reach 100%, but it has the exact price action you want with the exact volume that you want. But here we go. High day clear out. This is what, actually like an 80% parabolic, huge crack, fades all the way to the 1 minute. Like, this is like, this short's so easy. Like, there's some of these shorts are just so ridiculously easy. Like, look how hard these fade. Chop. Don't want to short this at all. You want to wait for the crazy parabolic with insane volume, and then it cracks. And also, good reason why you usually want it to be close to 100% parabolic. Anyway, just want to make that video. Hope it helps. I'll post on my Twitter a a Google Drive link that just has my Excel files for the 40% pre-market gappers and the 50% intraday runners, just with all of the just ticker and date, and that way you know what plays ran in the past, and you'll have, I think both files have like 1,500 examples each, so that's 3,000 plays. Plenty of plays to go back, and what I recommend is taking screenshots of all the chart files. Actually, you can't see that apparently. Taking screenshots of all these files, and that way you just have a master file document that you can reference at any time. And yeah, so hope that helps. Let me know what you think. Look out for that link on Twitter. I'll try to post it soon. Thanks.